Are you looking to get ready, be prepared, and transform your financial future? Then you've come to the right place. This is the Get Ready Money podcast with Tony Stewart, where Tony has insightful conversations with financial experts who are changing the way we think about money. Catch up on the latest financial trends and hear practical advice from Tony and his expert guests so you can build healthy habits that work. Be empowered with tips for implementing small changes that can have a big impact on your financial future. So sit back and get ready to hear from today's guest.
Welcome to the Get Ready Money podcast, changing the way we think about money. I'm pleased to be joined today by Charlene Cong. Charlene is an investment coach, Chartered Financial Analyst, founder of FinFit and YouTube creator. In this episode, we'll be discussing Charlene's insights on how we change the way we think about money and democratizing financial literacy. Charlene, welcome to the Get Ready Money podcast. Thanks for joining us today.
Hello, Tony. It's so nice to be here.
Yeah, well, looking forward to this conversation. So, let's get started. Tell us a little bit about yourself. What is your origin story?
Yes, my name is Charlene Cong. Currently, I live in Zurich, Switzerland. So actually, I originally from China, north part of China, actually 2 hours. If you drive from my hometown to North Korea, actually. So wow. I grew up in a really ordinary Chinese family. My mom and dad both are just ordinary Chinese. I would say they put a lot of effort or, put a lot of investment in, they invest a lot in my education when I was younger. And I did bachelor degree in literature in Beijing and then a master's degree in journalism in Hong Kong. So finance or investments was nowhere on my radar, till I was 20. And then I just got really fascinated by finance, by investments. And then I wanted to be an investor at some point, like when you were, I don't know if you have been to Hong Kong, but basically I felt like 90% of people or most people that I knew back then in Hong Kong, they work in finance. If you don't know about finance or investments, you're basically left out, I feel. And then as self-learned finance or investments, by myself, by learning the CFA charterholder program. And later on, I started my career as a journalist and then moved to JPMorgan Asset Management in Hong Kong and working after, I would say, 10 years in corporate. And also I moved to Zurich, Switzerland later on as well. And I just feel like, I'm a little bit done from the corporate world. So actually, I kind of retired from my corporate world last year, and currently I live on my investments. And on the other hand, I also become an entrepreneur, become a founder, and currently my mission is to empower 100,000 people without a finance degree, without a finance investment background, to be a confident, successful investor. So me, myself, I personally benefit a lot from learn how to make money, save money, and most importantly, invest money from a young age. I mean, it can be even younger, but I started when I was about 20 years old.
Well, that's awesome. That's quite the story. And as I understand, Hong Kong is definitely a center for international finance. I was wondering if you could just tell us a little bit more about the CFA designation, because I don't think people are aware of it and how, I don't quite know the word to describe it, but how powerful of a designation it is.
I mean, it is said by the industry that it is I would say, the most difficult exam if you ever wanted to work in finance to become a professional investor. That is probably, especially when you're younger, when you don't have a lot of experience, is a very good, I would say, starting point. And it's pretty much, it's like, I don't know if you have heard of CPA, for example, Chartered Public Accountant is like the most difficult certificate if you want to do you want to be accountant, and for investments, I would say CFA, Chartered Financial Analyst, that program. I would say overall speaking, you need 3 years and for level 1, level 2, level 3, and you need 4 years working experience. Currently, I just saw the news, like over the past 30 years, the passing rate has dropped from probably 80% to currently 45%. So the passing rate is really low. So it was, the industry, you just said, is the most important, most difficult exam ever in the investments industry. And I would say, overall speaking, I don't want to say, oh, once you pass it, you can do what. But overall speaking, it's really well recognized, I would say.
Yeah, well, thanks for defining it. Because I think, for the consumers out there listening, they definitely have no idea what all these initials mean that are after all of our names. And even for other professionals within the industry, I think there's still confusion about, well, how do I progress? What designation do I get if I want to succeed in certain things? And so I think it's important for those who are working in investments to think about, well, if I really want to get the most challenging exam in my field, in the investment field, that the CFA is something to pursue. But if you're not doing investments, and you're just doing general financial planning, it's probably not the right designation.
Exactly. Yeah, I just wanted to clarify. It's not for everyone. It's mainly for those people who wanted to work in finance, who wanted to become a professional investor working in for example, like an asset management firm like JPMorgan Asset Management, BlackRock, or any hedge fund firm. You want to manage, for example, billions of money, it's mainly for professionals. But it doesn't mean, every successful investors that you have to take CFAs, just like it's really a misconception, for a lot of young people or for a lot of working professionals. So that is actually the program later on I will introduce. You don't need to know a lot. It's investments itself can be really, really simple, can be really, really straightforward. You just need to know the basics, how money works, and how the market works, the stock market work. So at the end of the day, you don't really have to, or you don't even need to know what is CFA in order to be a good investor as a non-finance background, for example, entrepreneur or working professional.
Yeah, well, that's great. And I think to, make an analogy for people is like, you don't need to be a neurosurgeon to do first aid.
That's a really
you can
good.
learn.
I love it. Yeah, I love this.
You can. So you can learn CPR, but you don't need to learn how to do surgery. And I think that's a misconception about the money world. Is like you said, is you can do
exactly.
some very basic things without becoming an expert. That's why they're experts.
You don't need to have a computer science degree to fix some of my Microsoft Word problem. Let's put it this way.
Yeah, you just have to restart your computer a lot.
Yeah.
So let's move on to some of the questions, about financial literacy, because it's so important in the work that you're doing. Why is it important to democratize financial literacy, to make it available to everyone?
Yeah, let's just like use myself as an example. So I'm always very open to, at the very beginning, to my friends and family and friends, and now to everyone, like how much I make, how much I earn, how much I save, how much I invest, for example, right? And then, over the past 10 years, I would say I was lucky enough. I would say in terms of, in terms of salary or income, I would say over the past 10 years, probably I make $1 million USD. And then now I still have pretty much, maybe not $1 million, but almost $1 million. And then people ask me, Charlene, but you don't spend money, right? I don't know. I spend a lot as well. I mean, not a lot. I spend money, of course, right? You need to eat, you need to have a place to live. But that's why, I didn't, why now I still have almost that much is because of investments. So for example, some really, really simple strategy, or not strategy, simple principle. For example, compound. Like, in mathematics, you may learn it, but the school didn't really teach you how to use compound interest, for example, to invest. School didn't teach you how to, manage your own finances. So I think everyone at the very beginning, I thought it's only Chinese, it's only China. We didn't teach our students how to manage money. But when I, moved from mainland China to Hong Kong and Hong Kong to Europe, currently I live in Zurich, Switzerland. I feel it's across the board. The money topic, the finance topic, it was not really taught in school. So we didn't learn it. And there are just a lot of misunderstanding in this world about money, about financial freedom. This is a word that overused by a lot of people. We can talk about it later on as well. So the misconception, the misunderstanding is you study hard, you work hard, you can achieve financial success in the end. But actually, it's not true. You don't work for money. You make money work for you. So overall speaking, I would say in this society, the schools across the board, like I said, it's not only in Asia, in Europe, in US, everywhere. Money wasn't taught properly in school, and there are just a lot of misunderstanding, misconceptions around money topic about work hard, you will achieve your financial freedom, this kind of thing. So it becomes even more important to really democratize financial literacy, to democratize the money topic to everyday people, not only to those finance professional, but really to everyone.
Well, that's fantastic. And I'm so glad you talked about compound interest. Is for people who watch and listen to this podcast, you've probably heard half of the guests mention the magic of compound interest. And, one way or another, it is a very simple principle. And we did do an episode just about compound interest, and I'll link to that
great.
in the show notes. But that's how important of a principle it is. And I love what you said, to make money work for you, not to work for your money. That's so important.
Actually, when you mentioned that, it reminds me of a story that I just recently I had with my previous colleague in Zurich, Switzerland. That colleague, she has a PhD degree in water management, in engineer. I think the sub subject is water management. And one day I was, we talk about money, and then she was like, "Oh, she doesn't know what is an ETF, what is a stock." So what I wanted to say, I mean, for these kind of basic things, it's just like it's not like, I have a master degree, bachelor degree, or even like her PhD degree. This kind of basic things, it's just not taught in school. It's not because like you're smarter or she is less intelligent. Those intelligent people, a lot of them, although, in Zurich, Switzerland, I would say the minimum salary is already I guess for a full-time worker, it's already like 60K per year, 50, 60K per year hourly pay. The minimum is like 29, I think 29 francs, like it's around 30 USD per hour. So I believe a lot of people, they do have some savings, there, but most of them, like the friend I just mentioned, no matter how intelligent you are, how educated you are, this topic, money topic, finance topic, investment topic, is really not democratized enough. So it's really it's really needed in this society to really to normalize money talk, to normalize the basic principles like compound interest. I think a lot of people, they may hear about it, but really there's a limited number of people who really put it into action.
That is powerful. Is you have to put this stuff into action. And as you mentioned, where are people going to learn this? Is that, we get paid and then we're expected to know all these things and, to find good information. I want to give a shout out to your YouTube channel, which we'll talk about a little bit later. But, you are putting out great content for people to learn some of these concepts. So, that's it. Is I think people also need to make their choice that they want to learn. Um, because with the internet, all this information is out there. I think the biggest challenge for learning
Mm,
about money is deciphering what's good and what's bad, which is something that I hope this show, people who are watching and listening to the show will listen some of my guests and go, okay, these are people who, do know what they're talking about, and we'll listen to them over some of these other
mm.
self-proclaimed personal finance gurus who may not have the qualifications to discuss what they're discussing. So
Yeah,
that's
I think,
awesome.
yeah, that's really interesting. Actually, you mentioned that actually there are a lot of good informations online. There are a lot of good or even free education online, but people don't learn. I think, to be really honest, from my perspective, there are mainly two reasons. The first one is, yes, there are a lot of good information, responsible content online, but there's also a lot of scams, a lot of misconceptions, a lot of people. There are a lot of people who try to mislead you, try to scam you into something. Okay, to day trading, crypto trading, this kind of thing. Even on on YouTube, on Instagram, every day, almost every week I receive, I was dragged into a group, they say, oh, I make 500K in one night, learn from, this kind of thing is really everywhere. So back to the question, I think why people need to have the basic knowledge to identify what is the real good information and what are these scams. But for a person who doesn't really is not yet empowered by financial literacy, it's really hard to distinguish what is good and bad. And then secondly, why people there are a lot of information online and people don't everyone want to make money, right? I believe a lot of people want to become a millionaire, or a lot of people um want to know how to make money work for them. But I would say a lot of responsible content creators or responsible educators, they tend to maybe we didn't really connect us with people's real desire and and um and fears, I would say. So why there's a lot of get rich quick scheme, they usually they sell really well. Once because they are really in line with those everyday people's psychology. Everyone wants to get rich quick. Everyone wants to not to put a lot of time and effort, just want to have some quick wins. But instead, for those responsible content creators or responsible finance educators, you always say, oh, we need long term, 10 years, be consistent, discipline, and this kind of thing. When people when everyday people come in front of it, oh, I need to do this, that. Oh, it's such a hassle. I don't want to do it. So I think at the end of the day, I mean, from my perspective, that's two reasons that why there's a lot of information online, but people still don't learn it at all.
Yeah, no, I agree with you. And actually, that makes me think of the medical field as well, because I think it's just like dieting. There are some quick ways to lose weight, but they're not effective long term. But people, are attracted to that. Like, here's a shortcut to lose weight, when
Mm,
really the best way to lose weight is to be disciplined with your diet and take a long-term impact, which probably, segues to our next question, because you are into fitness. Your company
mm.
is named FinFit. So
Yes.
what is the relationship between fitness and finances?
That's a great question. I named my company FinFit, like you mentioned. So in short, it means fitness and finance, or fitness in finance. So me personally, I'm a fitness lover. I just got my certified fitness trainer, this kind of batch this year. So I would say there are a lot of similarities between the two, and there's a key difference between the two as well. So when it comes to similarity, so for sure, for both fitness and finance, you need a long-term. You need a long-term mindset. You cannot get six packs in a week. I know a lot of Instagram influencers or a lot of people online may tell you, okay, join my program challenge. 10 days you'll get blah 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 six packs. It's just not going to happen, right? You need a combination of cardio, resistance training, nutrition, your lifestyle, your enough sleep, water, all this kind of thing. You cannot just like do one single exercise and then you expect yourself to have six packs in a week. And finance as well, can you really become rich? So for example, I share my personal story, how I grew my 500 USD stock portfolio, my first investment when I was in 20 and a half, 21 years old. Until now, I manage a seven-figure investment portfolio. And people will ask me, okay, how can you turn 500 into seven-figure, like 1 million? It's not 1 year or 2 years. You need, like I mentioned, you need to make money, save money, invest money, make money work for you at the end of the day. So both fitness and finance, you need a long-term mindset. And secondly, you need consistency. But there's also a key difference between the fitness and finance. I would say fitness, you really need to, at least for me, you really need a lot of hard work. For example, I used to hit the gym at least like 4 or 5 days a week. Currently, I reduced to 3. And but for finance, you don't need to trade. You don't need to buy and sell every single day or even every week or a month. For me personally, I can really openly share my own strategy. So whenever I get paid, when I was still in corporate, I immediately, when I was earning little, like a bit less, I put 20% of my monthly saving into my investment strategy. And when I earn more, like for example, 2023, when I was earning almost 200K per year, I put more than half of my salary, just like salary that I earn from the corporate, into my investment portfolio. But I didn't do much. I didn't, buy and sell I just like keep buying. When the market goes down more, I keep buying more. So it is really, really simple strategy. So just like in conclusion, there are similarities between fitness and finance, especially when it comes to long-term mindset, when it comes to consistency, discipline. But there's a key difference between the two. Fitness, I believe you need a lot of hard work, but for finance, you can usually simplicity wins everything else.
That's awesome. Simplicity wins with money. But, even with finance, with fitness, as you point out, though, it is simple to some degree, is because it does come back to the long-term mindset and consistency and having a plan and a goal. But I think the biggest connection between the two is there are no shortcuts to it. I mean, does that make sense?
Yeah.
No shortcuts?
Yeah, there's no shortcut. As in my view, there's really no shortcut.
Exactly. So I think that's, and that gets back to what we were talking about, with the people, proclaiming, hey, you can make $1 million in 2 weeks if you buy crypto. No, you can't.
It can be, like I mentioned, it can be really, really simple. For example, my advice, or I don't call it advice because, you need to be compliant. I see myself as an educator, we're educators. So there's no shortcut for investments, for successful investors, but there is a really simple strategy that everyone can use. So it's not hard, but it's not a shortcut. So I just want you to clarify it.
No, that's super helpful. Thanks for clarifying. So, let's run through some of the get ready questions. The first one is, what basic money concept do you wish people knew?
basic money concept. I think we just talk about compound interest. I think that is definitely one of the or the most important basic money concept. But apart from that, something related to that, and which is time in the market is more a way, 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 way more important than time in the market. What does it mean? So it's also very related to compound interest, right? So at the end of the day, a lot of people, the misconception is if I want to be a successful investor, I need to get the timing correct. I need to get the timing right. When I enter the market, when I take profit, when I sell my stock, when I buy my stock, this needs to be correct. It needs to be, I need to get it right in order to be successful. But it is not true at all. You just need to be in the market. You just need to think long term. You just need to give yourself enough time. For example, a research has done, for example, 1,000 people as group A and another 1,000 people as, group B. And one is like, okay, you keep trading, you believe. One is they are really intelligent people for group B. So they keep, trying to find a perfect time to enter the market, trying to find a high point to sell the stock, trying to find a low point to enter the market to buy the stock, right? Everyone wants to buy low, sell high. And then the other group is just like, no matter whenever it is, I just want to enter the market, buy the stock, and then I wait for 5 years, 10 years. And then you can see when they compare the two groups, like no matter you put 1,000 people there or 20,000, at the end of the day, the group A, believe me, always outwinning the group B because the time is way, way, way more important than timing the market. And why people cannot time the market? Just because no one knows. No one have a crystal ball. No one, even those I would say highly educated hedge fund manager, mutual fund manager, active managers who spent 20, 30, 40 years as a professional investor, they cannot time the market right. They can probably, outperforming a little bit of the market, but they cannot. They don't do they don't do day trading. They don't buy and sell often as well. So at the end of the day, I mean, if you ask me what basic money concept do I wish people know, I would say always believe in time, believe in compound interest, believe in that time is just way more important than time in the market.
Yeah, well, that's wonderful advice. And I think you dropped a couple super important pieces of knowledge there. One is that when you look at professional managers and investors, that over the long term, most of them don't really beat the market on a consistent basis. But I think the other thing that you talk about is a long holding period. For people who watch and listen to the show, they know I talk about Warren Buffett a long time, who often says that his anticipated holding period is forever.
Yeah.
And I think we can all agree that Warren Buffett has been fairly successful in his investing. And to learn more about Warren Buffett, and I'll drop this in the show notes, is he puts out an annual letter available on the Berkshire Hathaway website, where that's all you need to read. It's free to get an idea of how to think about investing. And the one thing he does say is to not do what he does, but to listen to how he approaches the market. And the other thing is Warren Buffett's mentor was a fellow named Benjamin Graham. I'll also link to his book, because if you really want to understand, go deeper into why you really can't time the market from somebody who knows and is known as, a guru in the investing world, is you can't go wrong with understanding Benjamin Graham and his principles of the investing world. So sorry, taking a little bit of a detour there, but those are some resources for people to further what Charlene's saying. So the next question is, what is one simple thing that people can do each year to set themselves up for financial success?
I would say you need to conduct an annual financial review and goal setting every single year. That's what I have been doing over the past few years. So before I got married, and now I'm married, when I'm as a married person, I do it for for my family as well. So I don't think a lot of people do it, but I highly, highly suggest you do it. Review the past year first. Look over your income, your expenses, your savings, your investments, and you know where your money went and whether it aligned with your goals. And then you update your budget. You can adjust your budget to reflect changes in your lifestyle, priorities, and financial situation. And then you set your goal for this year, how much you want to make. Or, I mean, you pretty much know how much you can probably make, right? Roughly, and how much you can save, paying off debt, starting an investment portfolio, saving for a major purchase, setting your goals for this year. And then you will know, okay, how you can increase your savings rate or investment contributions in order to achieve your goals. So actually, I have I personally I use budgeting template, that a budgeting template that I personally use. So if any of our audience today, if you visit my website, charlenecong.com, you can find my template, the budgeting template that I personally use. You can download it for free as well.
Great. Well, that's awesome advice. And I will link to the budgeting
Yes.
template in
Yeah.
the show notes so people will be able to easily find it on your website. But what I think you're saying about annual reviews, I think people so often forget that with their financial service and products. They set it and forget
You know
it.
why? Because it's by the end of the year, people have great meals, you have alcohols, but we really need to normalize it at the beginning of the year or at the end of the year. Do a review, do an update, set your goals. A lot of people do resolutions, right? New Year resolutions. Please always include your financial goals as well. That's my suggestion.
Yeah, well, that's awesome. And I think you said one other thing there too that people,
Mm-hmm.
I just want to reinforce is to align your money goals. But for everybody watching and listening who are members of the Get Ready Money Club, that's the whole point. It's free. But what I do is each week I send out a weekly action item to review a different area of your financial life, because this is, I think, the biggest Achilles heel in the financial services industry. The
Mm-hmm.
products are sold on a set it and forget it basis, like life insurance policies, and nobody goes back and reviews their things, reviews the beneficiaries on their 401k plans,
Mm-hmm.
all these things. I can't tell you how many life insurance policies I've reviewed that there's an ex-spouse as the beneficiary, which is never a planning goal. So, it's important to do these things. So I'm so glad you brought that up, because I think that's such an important point.
Yeah,
So the
but I
next
would say
question.
only 5% of people do it, probably.
Oh, yeah. And that's why I set up the system. So all you have to do is sign up for the Get Ready Money Club. It's completely free,
Yeah,
and you'll get a weekly review item.
that's
So,
super.
Charlene, let's talk about habits. What
Mhm.
is one habit that people can change when it comes to their money?
I don't know if our audience heard a term called pay yourself first. I think if I have to pick just one habit that people can change when it comes to their money, is just to pay yourself first. What does it mean? Like whenever I think in America, we receive our salary twice per month, right? I think in Asia and in Europe, it's on a monthly basis. So my suggestion or what I do by myself is always whenever I receive my salary, for example, when I was working in corporate, I would firstly, no matter before I do anything else, I put 20%, 30%, or later on, like I mentioned, like when I earn more, I put 50 or more than 50% into my investment portfolio or investment strategy. So a lot of people, once they receive their salary, so let's go on party, let's go have drinks, let's celebrate. Yes, it's like you pay your stomach, you pay the fun things. It's not like pay yourself first. Get 20%, at the very beginning, it can be only 5%, 10%, but you need to develop that habit. That's something that I would say can hugely, significantly change your financial situation when it comes to your money. Pay yourself first, pay your investment portfolio first, and then you can use the money, the remaining money. Okay, I want to buy a nice For example, watch, I want to buy a nice camera, but always remember, pay yourself first.
That is awesome advice. And again, that's something that other guests have shared. And I think because it's such an important way to look at the flow of your money, and it's an easy adjustment to make, is because, as you point out, if first, I mean, obviously you pay your mandatory expenses, housing, clothing, whatever, food, shelter. And then I mentioned clothing. Clothing is not a mandatory
Yeah,
expense.
clothing
That
is
is a
not.
discretionary expense.
Yeah, I always
But
joking about the clothing. Me and my husband, our favorite brand is Uniqlo, the
okay.
Japanese one. Although we can afford, a lot better brands, but it's comfy, unless we really have the, need to meet clients or, have some events. Otherwise, we just like, or for a podcast like this, probably I don't wear Uniqlo. But if you see our clothes, that most of our clothes are from Uniqlo.
Well, that's awesome, and I think that's something else that we talk about, and other guests have talked about, is that the millionaire next door, if
Mhm.
people are familiar with that book, is that the wealthy people, a lot of wealthy people are not driving fancy cars. They're driving 10-year-old cars. They're not living in mansions.
Mhm.
They're living in just regular houses. Like Warren Buffett even he's still living in the same five-bedroom house that he
Mm.
purchased in 1953. And Warren
Yeah.
Buffett could definitely afford an upgrade if he so
Yeah,
chose.
yeah. At some
Um,
point, you don't need to have those luxury things to impress others, right? You want to be comfy. That's all you need. You want to be happy. You want to be comfortable. And what can brings you comfort, comfort and happiness. And you decide by yourself, right? You have the choice to buy more luxury things, but you don't need it. You don't need to impress anyone.
Yeah, well, and as you point out, is to take care of your savings first, meeting your
Mm.
goals, and then spend it, if you want to go out and party, if you want to go to a concert, if you want to go out to nice dinners,
Mhm.
but if you do those things first, then oftentimes I know a lot of us come to the end of the month and go, I don't really have any money to put in savings because I spent it all. But, it's a
Yeah.
great concert. So you have to balance out those experiences, which is super popular. And especially if you're on like Instagram and you see people and their experiences all the time, it's really hard to go, oh, they're going out to eat, they're going on this fancy vacation. But you have to have the discipline and you have to keep in mind what's right for you, not what's right for everybody and what's right for Instagram.
Yeah,
So
exactly. I'm not asking anyone to live extremely frugal, like don't drink. You know, I think in terms of food, I really go for quality, but in terms of some other things like discretionary kind of things, I will say, oh, it's good to have it, but I don't really need it. So it's like you said, keep a balance.
yeah, balance is key. So, Charlene, what money myth are you trying to break?
There are a lot of money myths, I would say, in this world. First of all, um, investing is only for the rich. A lot of people still today people think that when I mention, people ask me, oh, Charlene, you quit corporate world and now how can you survive? So I've been working so hard over the past 10 years. I make not a lot of, I make enough money and then I keep saving, I keep investing. Now I can, I can really live on investments income. And people are shocked. People, oh, it's only for millionaires. No, it's not only investing, it's not only for millionaires. You can actually become just an investor just with 500, 100. You can start really small. Like I mentioned, I started my first investment as in an ETF VOO. I can be very transparent. I only invested about 500 USD. Back then I invested in Hong Kong dollars. So that was my first investment. And then I keep, putting more and more money. So you don't need to be rich in order to get started with investing. And then another myth, I would say a lot of people thought investing or money overall, this kind of topic is only for smart, intelligent people. Is you have to have 10 screens, you can you imagine those movies and Wall Street, those kind of movies, Big Shot, they have, 10, 20 screens in a room, and you have to be really, really intelligent, buy, sell, like find the triggers, those signals. No, you don't have to be like that. Investing can be super, super simple. You can just have like two investments, and you keep in, as your core portfolio, and you keep investing into it. It can be super, super straightforward. So I would say, if you ask me about the top two myths, I would say one is about money is only for the rich, which is just so wrong. And secondly, it's about you have to be intelligent, so intelligent, smart, good at math in order to be a good investor. That's just so wrong as well.
Yeah, well, I think that's such a compelling point, and it gets you were talking about this earlier. Is that people who have the 10 screens are professionals who do it all day, and that's their living. Is you don't need to do that. There are some very simple ways to invest, as you point out. So let's get out the time machine real quick. Is what advice would you give your younger self if you could go back in time, knowing what you know now about money?
I think I was quite lucky. I already started quite young as an investor, like little investor, when I had only 500 USD, and it's all my life savings, I would say. But if you ask me, if I could go back in time, I think I would start even. I was want to start even earlier, when I had some pocket money from my relatives. In China, we every Chinese New Year, your family relatives, they give you red packets. It's like 500 RMB, 1,000 sometimes if you're lucky. So I accumulated quite a, yes, I mean, back then it was quite a big amount for me already, but I just like save it in a bank, so I didn't touch it. But I mean, when I look back, I would say I wanted to even start even earlier as an investor. And the main reason is that you will make mistake. Everyone makes mistakes, right? When the market goes down, you will panic. Everyone panics. But when you only have little money, you put money in, you make money work for you, and then you get panicked. Probably, yes, you pull the money out, you take profits, you sell the stocks when you shouldn't sell, but you start earlier. You start with less money instead of now. For example, now if I have 1 million only in cash, I want to make the money work for me as a really young or new investor. Now I have 1 million. If I take the money out, if I sell stocks when I shouldn't sell, it's such a bigger failure than than what it could be, 10, 20 years ago. So start earlier, start small. So if you ask me, I would say I will start even earlier. So I will learn from those mistakes, learn from those panics, and be even stronger later on.
Yeah, well, and a couple of great resources. That's wonderful advice to help your kids learn about money is the Four Money Bears and Sammy Rabbit. Links to those will also be in the show notes. These show notes are going to be very long, but I think help your kids understand about money. As I mentioned pre-show, my wife is Chinese, so we have Chinese New Year as a family, and my son gets
Yeah.
Lei, and I
Okay,
had him put,
lacy. Yes, exactly. In Cantonese, we
yeah,
call it lacy. Yeah.
and put 50% of his money. He's got a brokerage fund. Where we've also talked about the fundamentals of investing, and I've bored him with Benjamin Graham and Warren
Oh,
Buffett, but he knows who they
cool.
are and how they work. So
Yeah,
hopefully that
that's
will
really
help him as he's a
important.
young adult. But we put his money aside, and that's something that all parents can do. When your kids get gifts of money, is put some of it aside. Put 50% of it aside. They can still go to Target and get Pokemon cards and save money at the same time. You know.
Yes, exactly.
So to wrap up, what is your number one tip on changing the way we think about money?
I think view money as energy instead of something like related to sins. A lot of people think, yeah, which is also true. Money cannot buy you happiness, right? A lot of people say say it, which is true, but money, see money as an energy. For example, money cannot buy you happiness directly, but money can buy you security. Money can more or less, to some extent, buy a nice, good education. Invest in yourself. Money can, offer you freedom, opportunities, right? Travel around the world, be more open-minded to experience different culture. So money is a great tool, can be used. Money can be a great energy, source of energy as well. So I would say, if you ask me the number one tip on changing the way we think about money, I'm not saying, money can buy you everything, but money can do you a lot, can help you a lot as well.
Yeah, definitely. And I think that's such a powerful point. Is sometimes there's very wealthy people who are just not happy, and that all they can think about is getting more money instead of
Mhm.
enjoying themselves. So that's powerful advice. So, Charlene, where can people learn more about you, what you're up to? You have a course coming out, which may actually be out by
Yes.
the time this
So
episode gets
actually,
published.
yes, so actually I'm preparing on 25th of September. I'm going to launch my free webinar, free masterclass on how I turn 500 USD into a 1 million seven-figure stock portfolio. So in that webinar, I will share a step-by-step approach, how I approach the market, how I really started to invest in the stock market and bond market, overall financial market, and how I really make money work for me. It's a really step by step guide, during that webinar, and it's totally free. So where you can see it, you can actually check my website, charlenecong.com/webinar. So Tony, maybe you
Awesome.
can do me a favor to put a link there to benefit more people as well.
Definitely, definitely. I sure will. And when this episode is published, Charlene's masterclass should be live, so you'll be able to check it out. And
Yep, you can
also
register
a
there.
shout out to your YouTube channel, Charlene. You also have an amazing YouTube channel
Yes,
where
we
people
have
can.
over 50 video published already on that channel. We just started last year, but every week we have one video out. So on that channel, Charlene Cong, CFA, that's my channel's name. So where you can find how, what you do, what you need to do before you get started, you start to invest, and how you start, how should you get started with investing, and how to make more money, save more money, and invest money. So you can find everything on my YouTube channel as well.
Fantastic. And for everybody watching and listening, as always, there will be links also to Charlene's resources, the YouTube channel, and everything else. So, Charlene, thanks very much for joining us today on the Get Ready Money podcast.
Thank you for having me, Tony. Such a pleasure.
Yeah, this is a great conversation. And thank you, everyone, for tuning into this episode of the Get Ready Money podcast. If you learned something today to change the way you think about money, please be sure to subscribe and to tell a friend. Until next time, let's change the way we think about money.